Hey everyone, I'm Bradford with the Penny Pinter's Guide to Personal Finance. As of this morning, the Bureau of Economic Analysis released the U.S.'s second quarter GDP results for 2022. With the results in, it does show a second consecutive quarter of declining GDP coming in at negative 0.9%. Now, why these numbers matter is that according to common wisdom and what most economists use to define a recession is once you have two consecutive quarters of a declining GDP, an economy is considered to be in a recession. But as of this week, we have come up with a new political hot topic to debate about, and that is what exactly is the official definition of a recession. Now, it's actually the National Bureau of Economic Research which defines whether or not the US is in a recession or not, usually looking back with hindsight being 2020. Now, the reason that this is such a hot and contentious topic right now is that there are actually basically split parties saying, one, if we have, two consecutive quarters of a declining GDP, as well as looking at how bad inflation is and everything else, it's obvious we are in a recession. Now, on the other side of the aisle, we're going to have people that are defending saying that no, that is not the actual technical definition, and the US is not officially in a recession until the National Bureau of Economic Research says that we are. So we're going to look at some of the speakers on both sides of the aisle, and then throughout this video, I'm going to look at what their points are and help you understand whether or not we are officially in a recession and whether or not that actually matters. So starting off, let's look at the CNBC pundit who talks about what the official definition of a recession is and what its actual impact is on investors and the stock market.
And I know that we, often talk about what the real definition of recession. Obviously, it isn't back-to-back negative GDP quarters. Oh, that's only in the eyes of the investors that are trading markets. That's all that counts, in my opinion.
Now, in stark contrast to that, we actually have the U.S. Treasury Secretary Janet Yellen, who had this to say about what the official definition is of a recession earlier this week.
I understand that, but you're splitting hairs. I mean, if the technical definition is 2 quarters of contraction, you're saying that's not a recession?
That's not the
No?
That's not the technical definition. There's an organization called the National Bureau of Economic Research that looks at a broad range of data in deciding whether or not there is a recession. And most of the data that they look at right now continues to be strong. I would be amazed if the NBER would declare this period to be a recession, even if it happens to have 2 quarters of negative growth. We've got a very strong labor market. When you're creating almost 400,000 jobs a month, that is not a recession.
Now, the real thing that matters for most Americans is whether or not we are actually in an official recession is how is it actually impacting you and your pocketbooks. Looking at inflation at a 40-year high approaching double digits, meaning that everything from last year to this year on an average is almost 10% more. And with some categories such as gasoline, when you go up to fill up at the pump, it's over double depending on where you live. As well, looking at what is going on with the stock market. Since the beginning of the year to now, we've seen a drastic decline in the S&P 500, the Dow Jones Industrial Average. If you're invested in crypto, a lot of crypto investments have really tanked, with Bitcoin trading at over $60,000 a coin last year. Now it's hovering around the $20,000 mark, with Ethereum seeing similar results in terms of what percentage that it lost from the end of 2021 to where we are right now in July of 2022. Now, if we look at the commonly used definition of 2 consecutive quarters of declining GDP, it's obvious to everybody around that yes, we are in a recession. We're just being told officially what we already knew intuitively based on what is going on with our wallets and how much we are feeling this taking away from money that is coming into our every paycheck. Now, on the other side of the aisle, coming from the US government's mouth, is that, hey, we're not actually in an official recession until the numbers and the actual definition is met by the National Bureau of Economic Research. So one of the biggest points that Janet Yellen points out is that we still have good consumer expenditures, as well as the fact that we still have a strong labor market. Now, the labor market is specifically referring to our unemployment rate. And right now it's hovering between 3 and 4%, which is an excellent unemployment rate. Until we consider the fact that looking at historic recessions, unemployment is one of the things that is a lagging indicator. And if you just think about it logically, when you have a situation that's going bad with an economy, employers are not just going to immediately lay people off. Usually, they're going to try to do their best to keep their employees employed until it gets to a point where it's economically unfeasible and they're going to have to start laying off some employees. So it makes sense that look at the 2008 recession that we experienced. It started at the tail end of 2007 and continued on to 2009. But looking at this chart, we didn't actually hit peak unemployment numbers until the tail end of the recession. And while not as good of an example, we can look at the 2020 recession that we experienced, which did see a Q1 and Q2 negative GDP, and then we saw skyrocketing unemployment all the way up to around 14-15%. But that was mainly due to many governments, whether it was the federal, state, or local governments, shutting down many businesses, which caused a lot of people to become unemployed. But even then, the unemployment numbers didn't peak until the tail end of the recession. So while our current unemployment numbers are still great, and it is awesome that so many people in the United States are still fully employed, I would imagine that our unemployment rate is going to continue going up throughout the end of this year and then into next year. Why behind that? Inflation. Inflation is still a huge factor, and it's not just affecting you, it's also affecting employers, with businesses having to raise the price of their goods because all of their costs are going up as well. And the other thing is, as the Fed continues to try to fight inflation, they're continuing to raise interest rates. And we're expecting another 0.75% interest rate this week. And as I would imagine, as inflation continues to be a problem, they're going to continue to hike interest rates to make money harder and more scarce to use, which will eventually combat inflation and cause it to level off and then decline back to a more manageable amount that is easier to understand, with cost of goods going up 2% a year opposed to the 9.1% that we're seeing right now. And at the end of the day, whether or not we actually have an official recession declared, we can all see that at this current state of the economy, everybody's pocketbooks are hurting and everybody's trying to find ways to make their money go a little bit further. And one way to do that is to make the most of your credit cards, like this one, which is going to give you 5% back on all your spending. Thanks for watching with me today. And please remember, from your first penny to your first million, we're here to help.